Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 14th day of May, 2014, and this is the Daily Report for Gold and Silver. After hitting a record top 19,000 Dow Jones Industrial Average, that's yesterday, we do have it dramatically lower, off about $100, but we have a nice recovery and a nice move to the upside across the board in the precious metals markets. Platinum up about $29 on the day, about 2%. That is leading the way, absolutely. Palladium up 1.35% to gold. Currently, as you can see, 1305.87. Correct, we are above that the elusive $1,300 mark. Now, the low has been 1292.80. The high 1310.20. Current print, call it 1306. Silver, although trading well off of the high is actually 20.05, current print 19.76. Silver is trading above 19.58. That's a critical point for me, but we are right in that real band that we talked about, that resistance band yesterday. Currently trading 19.70, and as I said, puts it up about 20 cents on the day. More on silver towards the end of the show. So, first to gold. As I said, we're effectively trading above 1,300. We're up $11, $12 on the day. We have been looking at the fact that we have had a series of lower highs forming this upper resistance trend line, and at the same time, we have had a series of higher lows, basic compression triangle. Although it's a little early to tell, we have broken above that upper level resistance. We've done that quite nicely. Now, in terms of different resistance areas, should this market continue to trade higher, and I believe that it has all the ability to do that, we have a couple of points that we'll want to talk about. We'll go over that in terms of where we think this market could go, targets for our current trade, as well as what we see coming up in the near future. Now, really, we've got 1312, and 1312 is a 38% retracement. It is a retracement of this last rally $200 move, and that's your first level is 38. Your second level, of course, was 50. That's 87. That's where we had been putting our support. And, of course, we don't really need to look at that 61% level, but we can effectively say 87 turned out to be a pretty good level or band of support. And the reason that I say band is, rather than having these specific price points of and pegging a low, if we take a look at where they're clustered, in other words, where the lows are clustered, I think it gives us a more complete picture of really what's going on in the market. So let's not fill that in, but let's kind of take a look at it. And so you can see all this activity down here just below 87. Here's 87. The support itself, we pegged it around between 75 and 85 in that area. This being 80 right here, the bottom of that. And then these extreme lows came in at around 75, 78 in that area. But for the most part, where these real bodies tended to end up were at these various points. So I believe that this band is a pretty powerful band of support right now. And that being said, we want to see what kind of resistance areas seem logical. As I said, the first real area that we want to see this market take out has got to be 1312. Now, you can see where it effectively was a top in the market, and this is as recently as the end of last month, beginning of this month, right in here. And of course, right above that is a band between, call it 28 and 33. That's going to be based upon this top. So if we see this market genuinely take off, we have actually now broken through this particular level. So if we start to see it meander or anything, not really have some kind of powerful move up, then we know that this compression triangle is not acting out in a not so much a logical manner, but in the model that we predicted. Because as I said, compression triangles don't always have that real strong release of energy. But I can tell you this: if we're going to see that kind of release of energy, it does occur at these points. And there's really no doubt in my mind right now is that we have crossed over. Could we move back into the area? Absolutely. And if we does, it kind of invalidates that model itself. But in terms of a straight technical model, and that's what I base a lot of our calls on, in essence, I look at the underlying fundamentals in the market to ascertain what we think is going to be short, interim, and long-term direction. And then we really look at the technicals in terms of entry, exit levels, and most importantly, road signs along the way to give us an indication if the market is continuing along that path or, in fact, if we see it stalling. And so the one thing that we can do is we're going to want to look at the Japanese average charts to see if they're kind of building in momentum at all. And as I said, this is a very, very short-term chart, 480 minutes. We'll go to our daily in a second. I'm going to blow that up so we can look at these last couple of candles. We have the absence of the lower wick. That's good. And it also is a good body size. So if we're going to see a breakout and see any kind of a rally that's sizable, such as even this rally right in here, it's going to do so by consecutive candles moving up. Now, another way to look at it is if we look at this rally here, and this, of course, was the big rally going about $200 in the marketplace, 1181, just below 1391 on the high, and you can see that this wasn't really straight up. So when we look at this market, we had a spike, we had sideways action, we talked about that, and then we had our spike again. In the same way that we're seeing here, we had the market come up, a spike, a little bit sideways, spike, consolidation, spike, consolidation, spike, consolidation, spike. So you can see a market pretty much take straight off or run through a limited amount of stair steps on the way up rather than retracing. It consolidates, and that's the key, and that's the big difference. When you look at these particular candles, though, all the way up till the pretty much till a consolidation point, you have the absence of these lower wicks. That's what you look for. Then you get it consolidating, goes right back into it, but you do get the body size beginning to wane or to compress or to shrink as this market moves up. And take, for example, this area in here. If you compare this body size to here, they consistently and consecutively get smaller. Now, when we look at these two, they're about the same size. So, and same here, and then it gets larger. Here, it is almost the same size as this one. This is your most dynamic candle right in here when we look at these short term, and then smaller, and then finally to your consolidating, and in this case your pivotal candles, because it reaches this particular area and then begins to move down. So we talked about doing a basic fib retracement, and that's what gave us a couple of different levels, the 1312 and also the one band that we had, roughly 28 to 35. This is a slightly different technique, and on this technique we're still using our fib retracement, although on this one, rather than taking a fib retracement of the rally, I'm taking a retracement of this basic corrective action that we've had. Now realize I'm taking it to this low here, which is after the market moved up if we were looking at some sort of an ABC, but interestingly enough, 1329 comes out to be your 50% retracement. And when we look at that, there's no doubt we can identify some real resistance right here. This is that 1312. We've identified this as resistance. Now above that would be 38. And then above that would be 1362. So traders, assuming that we do get some kind of breakout, we have seen it break above the apex. If we get follow through on that, we have different areas that we're going to look at, and that is how we're going to build our current strategy on this trade. So we have seen a nice move in silver, there's no doubt. And if we look at the last couple of days in silver, we've had strong up moves, and we have surpassed what I believe to be a critical area, which is 1958. It had to go over there. But if you notice, we're trading just above that, and we're at the top end of this range where we've had former resistance. It has moved above that, but now it's going to run into really this whole level right in here, in which it's traded above, and then this level right here, which takes you anywhere to about the $20 mark. And in fact, what was it? 20.05 was your top today. And if we look at this, you can see the top comes right in on that. So traders, I still believe, at least for now, We are still within this defined trading range in silver. I think you're better off putting those trading dollars into gold. When silver takes off, there's no doubt about it. It is a percentage gainer, time in and time out. It will outproduce gold, but it hasn't been running favorably, I believe, in the same way that we've seen gold run. And for that reason, I'm still looking to be on the sidelines in silver. Traders, maintain your current long position in gold. We'll talk to you tomorrow. This has been Gary Wagner, wishing you, as always, good trading. Bye-bye.